Okay. Yeah, I would like to repeat the quote that Thomas Bukowski once said. If you have to squint to see the patterns, it's not a pattern. Also, chart patterns are essentially geometrical shapes created by a battle between buyers and sellers, right? To identify them accurately, you don't need a vivid imagination. You need to observe the following three core visual elements. All right, and in today's lesson, I will try to share with you the three core visual elements that to help you identify the pattern, the chart patterns on the trading view easily. The first core pattern I want to share with you in today's video is peaks and valleys. Those are the pivot points. Okay, peaks and valleys. Don't just look at the peaks and valleys at the highest or lowest point. We should look at them at the scars of the market. Looking at them at the scars of the market. All right. About the nature. The peak is where greed turns into fear. Okay. Peak is where greed turns into fear because that is when the highest price was formed and the bullish momentum was stop increasing, right? It was prevented by the seller. So that's why when greed turns into fear, because that is when many investors, many traders, they are afraid to buy any longer because the price already increased multiple times. Yeah, compare with its actual value. All right. So that's just why peak is where greed turns into fear. Yeah, like I just shared with you, at that point, buyers are exhausted and sellers begin to realize the price is too expensive. Yeah, like gold, right? When it's heading to 45, 45, 50, 47. Yeah, nearly 45, 50. So that's just when greed turns into fear, right? The sellers begin to realize the price is too expensive compared with its actual value. All right. About a sharp peak, which is a V shape. Yeah, a V shape indicates a panic or sudden profit taking. This is also the example for you about a gold market. Yeah, of the last day in December, right? It's nearly formed at a V shape for the peak area, right? And this is the meaning that panic or sudden profit taking. Okay, remember for the meaning of any shapes that the market describe on TradingView. Yeah, by understanding its meaning will help you to understand the intention of the market maker. Yeah, I will show you this note. So let you it's easily to remember when you read this again. Mm. And how about the U shape? U shape indicates a gradual distribution progress by shocks. Yeah, so it is a bit different about the meaning when it forms a different shape. Yeah, when it happened at the peak. All right. When a V shape show you the panic or sudden take profit, and U shape show you a gradual distribution process by shocks. Okay. U shape, gradual process. So when we trade gold, when we trade gold, especially like this time, this is the V shape, right? You can see the lean. It's very lean when it's heading to the highest peak is at 45.53. And suddenly there was a very powerful bullish candlestick happened immediately with a huge body of this bearish candle. So this shows you a V shape right at the peak, which shows you a panic sell or quick taking profit. If you cannot distinguish between V shape or U shape, you can change into line chart, and you can easily see it. It's like a V, right? A V letter, right? And when the price heading to previous peak again. However, the momentum this time is kind of slow, and investors have some time to solve it, right? And this is show you a U shape, isn't it? U shape. So you can see the different shape and also the different meanings of gold price when it having two different shapes like this on a real chart. So that's is when we're talking about peak. Opposite to peak is valley, right? Valley is where fear turns into greed. It will be opposite to peak. All right, the meaning will be opposite to peak. At that point, sellers run out of stock, buyers or smart money start seeing a bargain to accumulate. Okay, this is also a good price, and I usually share with you is that we need to make bargain with the market to identify a good entry point, good entry zone. Okay, so to identify the shape of the market when you do technical analysis, the line chart will help you to have a clearer picture when you see instead of when you see the chart in candlestick pattern. All right, and for this U shape, isn't it? This is the one looking like this U shape, right? Okay, and the meaning when it shows you the V shape and U shape as the valley area is the same meaning. Same meaning. If the V shape, it shows you a strong willing to recover to the previous resistance level. Okay, and so for the U shape, it will gradually, the price gradually increase, and it needs sometimes to accumulate before heading to a new level. Yeah, compared to the previous peak. All right. And how to read the flavor of peaks and valley. How to read it. Let's move to the next part. How to read it. In order to read the flavor of peaks and valleys, the first one you need to pay attention to is spacing. Yeah, spacing. The first one, first step, okay, first point is spacing. If peaks or valleys appear too close together, which is dense, dense validity. The market is noisy, which is choppy, right? Choppy. And you shouldn't, you should stay out. Yeah, that is when market appears too much noises, and it's easily to cause a liquidity sweep or hunting stop loss. So that's why when you see peaks or valleys appear too close, especially in a small time frame, like 5 minutes or 1 minute, that is when the market's moving in noises, and manipulated by the big players. That is not our game. So if you want to protect your capital, it's better for you to stay out. Okay, and if they fall apart and distinct, the market structure is very healthy. Let's go back to 1 minute, small time frame, so that I will show you the example. Candle, okay. All right, this is the example. When the market having a peaks and valley continuously. Yeah, so that is also when the market's moving in a sideways range. All right, at the peak area. And you can see at this period, it continued to form a very long wick candle. So it will cause the liquidity sweep or stop loss hunting. Yeah, it just sweep the stop loss and immediately reverse to the direction you enter to the trade. All right, to avoid the loss or high risk, we should stay away to trade. Stay out to trade in this period. Okay, we need to wait for the market to more stable. When it shows you a confirmation candle, like breakout or breakdown with a powerful bullish or bearish candlestick. Okay, so that is the meaning of spacing when you see peaks and valleys appears at the recent time. And the next point I want to share with you is sharpness. Besides spacing, sharpness is also a very important factor that affect to our trading result. So what is sharpness? Yes, sharp spikes often due to sensation news, low reliability, low reliability, and likely to be rested. It happens when it have sensational news. Yeah, or we usually call it the market manipulated. Okay. That is when it's form a sharp spikes on the chart. And for the round peaks or valleys, it show you systematic accumulation or distribution. Higher reliability and support or resistance here is very strong. So we have to, if you want to improve your trading analysis and your trading result, it's better for you to trade when the chart shows you the rounded peaks or valley. Okay, so that is the two factors that it will help you to make clearer, understand clearer for flavors of peaks and valleys. And the next part beside peaks and valleys I want to share with you is trend lines. Yeah, the next part is about the trend lines. If peaks and valleys are the joints, then trend line is the spine connecting them. All right, so when I do live stream on YouTube, I usually I usually share with you how to draw the trend lines by connecting the recent highs or lows together, right? So if peaks or valleys are the joint, yeah, then the trend line is the spine connecting them. It's like this skeleton. Yeah, that is why I use the skeleton to make a comparison to help you to imagine easily. And Bukowski also extremely strict with the trend lines. He doesn't draw them randomly. And the rule of touches, the standard drawing rule. Many books say that you only need 2 points. You only need 2 points to draw a trend line. That is absolutely wrong. According to Bukowski, 2 points are just tentative. There must at least 3 third touch points, or usually called it 3 pivot points, okay, for that trend line to be confirmed as a line. Okay, so generally, I will show you in summary that at least 3 pivot points. Okay, so less than 3 points or only 2 points. It's not a reliable trend line. Yeah, it will cause you noise when you're connecting only 2 points for this trend line. Okay, however, if you can draw a trend line and it touches more than 3 points, yeah, that is the perfect trend lines. Especially when you draw it in a big time frame from 1 hour. That is also a high reliable trend lines you can identify on the chart. Okay, so this point is very important for you to identify a high accuracy trend line. Okay, at least 3 pivot points. And why was it? Why? Why is 3? Because 2 points can be coincidental, but 3 aligned points are deliberate arrangement of money flow. Okay, because they define their positions at that line. All right, so that is the reason why he chose 3 is a minimum number for you, for any traders, if you want to draw a trend line. And similar to peaks and valleys, trend lines will have a very important factors that it will affect to a reliable trend lines is spacing. Yeah, this is the first factor that you need to pay attention to when you draw a trend line. All right, spacing. Between touches on the trend line, price needs to move away from the trend line for a certain amount of time or space. All right. Yeah, price needs to move away from a trend line for a certain amount of time or space. If price just cross right along the trend line without bouncing up, yeah, that line is very weak and it's about to break, or we usually call it breakout. All right, so this is example for you when we need to draw a reliable trend line. Let's change into the 1 hour time frame to see what if we can draw one. Okay, for the current candlestick on the chart, this is the opening candle when the market opened today. Right, open candle with a strong bullish candlestick. And this is the trend line tool. And like Bukowski, he's claimed that at least 3 pivot point will consider a reliable trend line. All right, and there we have the current one on the chart. Let me zoom it out for you to see it clearer. This lesson, I will go through it very slowly to make sure everyone can understand it. Yeah, because we have many times, right? Learning is forever and every day. Every time we have a new lesson, we need to learn it carefully and slowly to make sure that the knowledge I share with you is not difficult to understand. Oh, sorry. Delete this one. Okay, and as you see in the chart, there is 4 pivot point, right? 4 pivot point on the chart right now. 1, 2, 3, 4. And this is a trend line I draw on 1 hour. So you can trust it. Yeah, for the direction of gold price that move in today's trading session. All right, we're connecting the lows together. So we have a lower trend line like this, and it go through 4 touches point. Okay, high accuracy trend line. And this is also a clue for you that if candle break down from this trend line, it will confirm with you that the bearish momentum is coming back and dominating the market once again. And gold price cannot conquer the recent resistance zone. Okay, so this is the clue for you to do an analysis in today's trading session. And for spacing, yeah, between touches on the trend line, price needs to move away from the trend line. And as you can see, this trend line I just draw for you, the touch point is moving far away, right? Moving far away. It's not close. Yeah, it's not really close together. And it also meet the condition of Bukowski to identify a high accuracy trend line. And yeah, if the price without bouncing off, that line is very weak. It's about to break. Okay. Remember for this point that it will help you to improve the trading result. And for this trend line also, this one is not have at least 3 touching point, and price is moved far away from it, right? It's still moved far away from it, and it is a stable trend line because until December 25, gold price is still under the downtrend, All right. Price needs to move away from this one. Yeah, move away from this one. And need to bounce back. Yeah, bounce back. So this is the period that price move far away from trend line. Yeah, move far away from trend line. And we will go deeper for this example. If we draw a trend line and you see, yeah, you can see the top, the peak of the highest price of each candle just touch to the trend line and it just move near. Yeah, it's very near or tight. Stick to the trend line like this. That is a breakable trend line. And the proof is that the bullish momentum break out. Yeah, break out from this trend line and reverse to the bullish momentum. Yeah, like a bullish reversal in the first day, the first trading day of the new year. All right, so that is the meaning of trend line to help you identify which is a reliable or high accuracy trend line. Compare with a weak one. All right. If you want to remember, you can take a screenshot for these two examples to describe, the two solution of trend line. Yeah, and it will help you to understand and remember this factor easily. All right. Next is I'm talking about the spacing. And the next point is about slope. Yeah, slope. So what is slope? For the slope is too steep, which is higher than 60 degrees. This is unsustainable, like sprinting. The price will soon be exhausted. And for the slope under 30 degree, yeah, or too flat, it shows you that the wick trend or the opposite side can easily break it. Okay, easily break it. And how you measure the slope, this case. How you measure the slope, this case. Or if too steep, yes, bigger than 60 degree, it's not unsustainable. Or if it's too less than 30 degree, this is a weak trend. The standard angle is 45 degree. Yeah, this is the healthiest and most durable trend for a high accuracy trend line. All right. And for this case, yeah, if you have a flat here, and you can see it around 45 degree, right? 45 degree. You have vertical like this, and this is horizontal on the chart, and this is vertical. And this slope is nearly to 45 degree, right? 45 degree. I will draw this for you. And it's like a mathematical class, a math class, right? So technical analysis is not just isn't something is so difficult. This is the thing is very familiar to all of us. "45 degree." Because I cannot type the degree mark on TradingView, so I will note this word degree for you to easily to understand it. All right. This is the vertical, yeah, and horizontal. Just fake it. Yeah, made it hidden. And nearly 45 degree is a standard angle. Yeah, standard angle. All right. It's the healthiest and most durable trend. Or you can measure this way as well, because when a square angle divided into two, yeah, this angle, each angle is balanced, right? 45 degree. All right. And this is a flat one. Yeah, this is a flat one. Oh, sorry, this is a steep one. Yeah, yeah, a steep trend line, easy to break out. Yeah. And the next factor, that is the two factors related to trend lines that you can consider which is a stronger one. Yeah, more reliable when you identify it to do the analysis. And the third factors that it will depends. Yeah, it will affect to our analysis about the chart patterns is the interaction, convergence, and parallel. Interaction. Yeah, we will study about convergence and parallel. So what are they? What are they? This is how two trend lines, upper and lowers, communicated with other to create a pattern shape. For the convergence, if it coiling spring, yeah, if in coiling spring state, when the resistance line, which is the upper line, slopes down and the support line, which is the lower trend line, slopes up, they meet at a point. And the meaning, when price range is narrowing, buyers or sellers are being backed to a corner. Neither side is willing to yield, but the playing field is getting smaller. Okay, and for the result, an explosion, which is breakout, is about to happen. And this is the basis of triangle, wedge, and pennant patterns. All right, so that is one, two trend lines, convergence on TradingView. All right, I will delete all this drawing to make our chart getting more simple. I will redraw this trend line for you to easily observe it on the chart. Okay, and also I will draw a the upper trend line. It need to cross at least three, three pivot point. Okay, and it's forms. Yeah, this is form the channel. Yeah, the channel, or actually it's not a triangle at all. But if you continue to uh, lengthen it, it will cross it. But it now is nearly parallel, right? I will have another example for you to easy to imagine for the triangle pattern. Okay, this one. At least two. All right. And for this candle, it decided to break out from the resistance trend line, which is a upper trend line, right? And it confirms you that the breakout, the breakout or the bullish momentum is coming back and dominating the market. And it's time for you to enter the buy signal. But our mission is looking for a reliable or a perfect setup for the entry and stop loss or take profits level. All right. Like this one, connecting three picks together, and yeah, this one. Yeah, so it's from a triangle, right? A triangle pattern, at least 3 points. Yeah. And it shows you a breakdown, but this upper trend line, let me draw it. It hit to at least 3 touching points. Yeah, like the theory we just have learned. All right. And you can see it easily making noise. It just break out from the trend line and then reverse. But when it's break down, it just happened for a short-term bearish, short-term bearish momentum. And when the price touched into below support zone, it became very strong bullish, bullish momentum, right? And that's just about the divergence, divergence. And the second scenario of trend lines is parallel. Like I just gave the example for you. This one. It's nearly look a parallel lines, right? Parallel lines. However, when two lines run parallel to each other, meaning that buyers and sellers have reached a tactic agreement, but at the bottom, they sell at the top very rhythmically. The market is is in resting phase, or moving in an organized manner. And this case, this is moving in an organized manner. You can see it. It's continue to increase gradually. Yeah, in this uptrend, right? And the result when it forms two parallel trend like this, it usually continues the own trend. This is the basis of channel and flag pattern. So now it will continue to is the own trend. So what is the own trend? How can we identify the own trend? You can looking at a big time frame. Yeah, big time frame like daily. So you can see that now all the candlestick is still lying above 3 EMAs, right? Let's go back to the EMA knowledge again. So now on the candlestick pattern, it's just lying on 3 EMAs. So this is show you in the long term, the market is still in the uptrend. Yeah, it cannot break now. It cannot break down strongly right now. So this is the own trend. Yeah, own trend of gold. So if you want to identify the own trend of any asset you're trading, just open the bigger time frame, like daily or at least daily. So you can see how the candlestick is moving, reacting, with the EMA area. So for gold, The candlestick is lying on EMA, right? It's lying on 3 EMA ribbons. But this shows you the market is still heading to a very strong uptrend. Yeah, very strong uptrend. So this is the own trend. Yeah, own trend of the market right now. So this is also a reliable one because yeah, you can see that it's touching to more than 3 pivot points. Yeah, at least 4. And price is move away. Yeah, prices move away from the trend line. But if the price, yeah, move just touch to the trend line tightly. So this is a breakable trend line. But for this case, yeah, it's moved far away. It's not far away. It's moved away. Yeah, this still have distance between the lowest price of the candle to the trend line. Okay, so this case, I believe that gold in 2026 is to keep its bullish momentum. Yeah, in this year. All right. So that is how we can measure or identify the own trend of any asset you trade. So this knowledge is the combinations, not only the one we studied about the flag, the chart pattern. It's also about the candlestick, right? The candlestick and EMA. Yeah, the meaning of EMA. All right. And the key takeaway from the third section is before you try to remember if pattern name is a wet or a flat, look at the alphabet first. Are the peaks and valleys are sharp and distinct? Has the trend line passed 3 touch points? Are the two boundary lines converging or compressing or parallel or resting? And the last one, you need to answer the last question you need to answer by yourself is you have understood 80% of the story that the chart wants to tell you. All right, so I will note for you 3 questions you need to ask yourself first before you decide it is a reliable chart pattern. Are the peaks and valley sharps and distinct? The first one, the first question. And next one, has the trend line passed touch points or not? All right. And the last one, are the two boundary converging or parallel? So these are 3 important questions that it will help you a lot. Okay, when you do any trading analysis by using chart pattern.